Former Hurricane Harvey, which has become a tropical storm, is now a tropical depression as per the national agency in the States after it was officially downgraded by the National Hurricane Center. But the interesting thing that's come out of this is the direction of oil. We've seen gasoline rise, but we've seen oil drop. Now, normally when you see supply hit, as it is at the moment, because of what's happening in Texas, you would normally get a rise in the price of oil. Josh is with us now with some more analysis of what's going on here. This is a bit of a conundrum because I think in most cases you would expect oil to have risen, but we've been listening to you in Charting the Markets, we've been monitoring this drop in the price of crude. What's going on?
Yeah, so I guess the way that I see it at the moment is that there's almost two forms of dynamic going on in the region. On one side, you've got the production of crude. On the other side, there's the refinery of crude. Now, we've got a huge amount of the refineries actually within this area that are being knocked down. And with that, there's going to be less demand for the product that goes into it, and that's going to be crude oil. Therefore, you'd have less gasoline. So we're seeing gasoline prices going higher, but less demand for crude oil. And as such, we're seeing crude heading lower. Today, actually, we're seeing it gain ground, but I think this could be a good opportunity to be able to short it once more, and we can see with the chart here. So this is a daily time frame. What we can see here is from the wider perspective, you can clearly see this downtrend in play. I personally think that this is another top, just like we've seen before in May and way back in April, and therefore that would potentially mean that we could be seeing a double top here. Now, the first part of that has come to fruition with the creation of a new lower high, and we would need the break below 49.92 to point towards another strong move lower. But if we look at the shorter term perspective, the 4-hour chart shows you that we did have this symmetrical triangle. The breakdown then led us to a nice move lower. We're now seeing a rally towards the upside into the 200 period SMA on the 4-hour chart. So far, that's respected it on 2 occasions today. If we look on the hourly time frame, we can see that we have trendline support up ahead. We've also got these Fibonacci's that are going to be key, your 61.8 and your 76.4. So if we were to see further gains, this looks like a really interesting area for shorts. But albeit as we're respecting the moving averages, as you can see here, we've got the 1 hour 50, but also it's the equivalent of the 200 on the 4 hour. Ultimately, I do think this market's going to turn lower once more, and this 51.67 is going to be key. You can see this area of resistance held on a number of occasions. So I think as we come higher, and certainly previously we've respected this 50-hour SMA, as we come into this area, I think it's likely it's going to be sold into. We're seeing it at the moment, but I do think it's likely to persist, and we should be able to get back below that 50-50 low and continue on the weak trend that we've been seeing over recent days. If
you were to be putting on a position which would take this market low, in other words, you short this at these prices, where would you put your stop?
So I'd put it above this 51.67. That essentially means that we would have to create a new higher high, something we haven't done for some time now. It would also mean that we'd have to break through the 50-hour SMA and this descending trend line. So there's a fair amount of resistance, I guess, that should be able to hold it up and be able to push it lower. So for me, that gives me a bit more confidence that if we were to break up above this area, then I would be able to say with quite a bit of confidence that, okay, my trade idea is negated, and therefore I'd be happy being out of the trade.